Hi everybody, it's John Seville and this is your executive summary time for stock setups for the 10th of February. And what a market it has been, some amazing performance. Anyone from our big one class, of course, last week, really locking in some humongous profits as Lionsgate plummeted 40%. 27.19% on Friday. So any one of our big one members there who were into that, or any of our people following along with that stock selection that were in on those puts, should have made big time bank on that. Really happy with that. So let's have a look at the US markets. Of course, we've been publishing our stock alerts and so forth, trading in and out of things like Amazon. Obviously got out of NUGT yesterday. The market's kind of had a consolidation day today, not making a new high, not making a new low. However, the high yield bonds did. Looking at HYG, we can see that we're right down at support, but we did make a lower high and lower low on HYG. So really, we want to see HYG break 76 to show kind of a new leg of the downtrend in terms of the bond traders' faith in the US markets anyway. Having a look at possible new trades for tomorrow, I've got a few on my watch list. The ones that I've been watching, things like GGP. Just looking for stocks that are about to enter possible new trends. You can see GGP seems to have broken through its support zone. Right down there at 25, you can see that's the trend line support as well. So just a little bit lower than that. So if I get a break of the low of today's candle, that could be a nice possible entry point. However, this is a very sharp oscillating stock, so I wouldn't be surprised to see this break up or rally back up to say 26.20 before it begins that decline. So this is probably one of my not one of my favorites, but one on my watch list for day traders more so. But again, you can see that the candle's just starting to contract over the last two. So just a little cautious of an upward movement first before the next down decline occurs. We had 1, 2, 3, 4, well, really 5 kind of down candles all in a row. So that move may be getting just a small bounce before the break. But that's on the watch list. The ones that I think are probably closer to being actionable tomorrow is actually looking at, once again, at Amazon. Amazon was unable to break after that gap down from obviously from Friday to Monday. Yesterday, I took my profits on those puts that we've been trading, and I'm looking to possibly get back into those again if we start breaking lower than the low of yesterday's candle. So 475.21. So if we break 475.18, I'll be looking at once again to look at the 450 or 460 March puts, and even looking at that, just having a quick look. Or even rolling that out into April. So I mean, looking at just having a quick look at the prices there. We've got the 450 April puts are currently $20. So that's where I would be looking, is the 450 April puts at currently at $20. Okay. The other one, as you can see, this is broken down a lot of key support levels. Money flow is continuing to fail, and again, I mean, this stock has come a long way. So 450 is going to be some key support as we approach this level right there. But otherwise, we're underneath all of the moving averages and seem to be respecting the power of those moving averages as we decline. So certainly look for some support. I mean, but 450 is where I'd start taking some profit. If you're looking for more kind of in the money options, obviously you can go with the 460s, but 450 would be where I would start to look to take some profit there, and then re-enter if it broke down below 450. And the 460 options, for example, are 23.61. So you can certainly look at the little bit higher priced ones if you like. But basically, we've got a $30 drop there, so a good chance to pick up some possibly 100% return there. Okay. So then the second one, CRI, Carter's Incorporated. You can see that we've got a major trend line here. So again, firstly look at where the stocks come from. Back in 2008, we were down at $10. These are in the textile, apparel, clothing industry. We know that's been under a lot of pressure. We've got a long uptrend here from $10 to $85, and you can see that we've broken down from underneath this trend line. We rallied up, hit it from beneath in kind of an upward channel type of fashion, and seem to be breaking down now. So I'm looking for two possible ways to trade this. Again, we've got a very sharp oscillation move, very directly downwards. I mean, this could be that we have a kind of a head and shoulders type pattern that may be forming. Maybe we have a left shoulder, the head. Maybe we get a right shoulder. Therefore, that would come up, and you can see, so that would basically tag right in here. So if we got that, that would be absolutely perfect. So I mean, I'd be looking to enter into it if it got up to around that kind of 88, 90 level, or if we just see a breakdown below 84, then I'd also look at entering that position. So either way, the options I'd be looking at is the June $80 puts, which are currently $3.80 bid, $4.60 ask, but their last trade was at $3.50. If we did see a head and shoulder pattern, if that was what it ended up being, then we're looking to a breakdown to the $73 range. But this has got some powerful money flow coming out of it, and as you can see, there's a lot of possible movement there to the downside, and as you can see, that is where that support level pretty much was exactly where we got a strong rally back in October. So that would be my preferred play. Is either looking for a rally up to here, or looking for the continuation breakdown. But looking at basically as I said, either if we rally up to 88, 89, then we're looking at a break from 89 to 72. So that's basically $17. Or from 84 down to 72, looking at $12. So those are the two key trades I'm looking at for tomorrow's trading. And of course, we'll continue to watch NUGT after taking profits on that. That does look like it could, on the long side, that does look like there's going to be some more power left in that. But just battling between the moving averages supporting it beneath and the power of this 161-day and 150-day above. So this could pull back. Certainly, if I saw it down around the $35, $36 area, I'd look to re-enter and buy some call options, looking at, let's say, $40 call options, and we'll look to see how this continues from there. Okay, everybody, well, that is your executive summary for tonight. Have a wonderful evening and happy trading.